Hi, thanks for joining me in my market report. My name is Mike, and my market report is on mortgage rates. We like to get into what's impacting mortgage rates on a daily basis, whether if it's part of the economic data that's being released, if it's sentiment soured on the markets, that maybe something illogical could be happening, which does occur on occasionally, geopolitical or some type of headlines. We kind of get into what's impacting it, kind of give you some informed decisions and kind of what's ahead of the week. So that way, if you are in the market to refinance or purchase and probably are watching rates, this is a great video for you to watch and hopefully give you some give you the information to make you an informed decision whether if you want to lock your rate or if you want to kind of hold out. A little bit about myself is I'm a loan officer. I do work with a national lender, so we can do loans in all 50 states. If you guys got questions about anything, need assistance, please reach out. We're here to help. I'd love to earn your business, so please give us a shout. Love to be able to help you out with your next purchase, or if you're looking to refinance, again, we are here to help. We got a lot of different programs, great rates, great service, and would love to be able to share that with you. Without further ado, we'll start with the economic data. I'm going to go over a different calendar because this one is kind of limited. I got this other calendar here that gives a little bit more information, so we'll go with this one. We'll start off with the personal income for the month of August. So it was up on 1.1% in the month of July, and forecast was calling for 0.3%, and it went up 0.2%. So still decent, but obviously not as well as July here. Now, we also got the PCE, which is the Fed's favorite gauge of inflation. They actually look at the core PCs when you exclude food and energy, but this is the headline news month over month. So the previous month, back in July, it went up 0.4%, and it continued that same trend at 0.4%. So that brought it year over year from 4.2% up to 4.3%. Now, another outlay of the personal income is we can also look at the consumer spending for the month of August. So this was actually revised lower. It went from 0.3% down actually to a negative 0.1%. So it's actually a drop month over month. And forecast calling for 0.86%, and it increased to 0.8%. So people are spending a lot more money in the month of August than they were actually increasing in their income in personal income here. Now we also got the core, as I was talking about before. This is what the Fed looks at. They call this the real inflation. So look at month over month first. So the previous month in July, it went up 0.3%. Forecast calling for 0.2%, and it went up 0.3%. So basically, it stayed at 3.6% year over year so far. And the Fed usually likes to keep this between about 2% range. So we are at the higher end of the spectrum where we like to be. However, it does seem to be slowing down a little bit. Now, we have been starting to experience again some supply chains, so that could create some more inflationary pressures, as well as trying to get people back to work. Employers are having to entice people with higher rate pay, so those are items that could increase or put pressure on inflation later on. So we may see another spike, or whatnot. So we'll have to definitely keep our eyes open on those. We also get the month of ISM manufacturing here. So we had anything above 50 on this index is considered expansion or optimism. So we had a 59.9 back in August. Forecast calling for 59.6, and it increased to 61.1. So great overall number right there. So we're in good shape in terms of manufacturing. And last but not least, we got the consumer sentiment for the month of September. So we had a 71 forecast for continuing at 71, but however, it did improve a little bit to 72.8. So overall, pretty good numbers here. I don't think some people might not like the inflationary data, especially the headline. However, it does at least when you remove the variables like food and energy, it seems to be kind of slowing down a little bit. And again, that is the Fed's favorite gauge of inflation. So let's go back to see how this is. Sorry about that. Let's go back to seeing how it's affecting mortgage rates here. Well, we'll touch on stocks. Stocks are up so far today. They are looking at the supply chains and concerns, and if there could be future spikes again with COVID. So those are all different things that they're looking at. But MBS today, we'll take a look right quickly here. We are up 14 basis points. So over this past week, we have been seeing some improvement, which is good news here. And we seem to hopefully have hit the bottom here. But Right now we're at 14 basis points, so that will show us some improvement in our pricing in terms of mortgage rates. So good news on that front. We'll see if that continues. We did continue that front yesterday. I think we ended up closing up 17 basis points, which is obviously good news as we try to continue get back to the levels we were before. Especially up this range. Um, let's go ahead and take a look at the Treasury here. Treasury, we're still trying to get past this level here, the 148 range. 148, trying to get below this. And we need to try and get below that to get back down to here. And that could keep the pressure on mortgage-backed securities from being able to obtain back those levels we were before. So, again, this will, we're overperforming in terms of mortgage-backed securities compared to treasuries, but at some point it's going to kind of halt until we can get treasuries back down a little bit further. So we'll have to see if we can get that back down again, like we did back over the summer when we had that or back in the spring when we had the vaccinations, and then also treasury spiked. We'll have to wait and see if this calms down and comes back down or not. Now there were speculators or forecasts calling for 2% in the treasury. So right now we're at 1.48, so we're well off that, but it's not to say we can't get down there. So we'll have to wait and see if that's something we can accommodate or not. Now, national average for stocks, or I'm sorry, for rates, 15-year right now 2.59, looks like to be about the same as yesterday. 30-year at 3.15. Again, if you haven't been following my videos, those do include some points in there, and again, those are just kind of the national averages of what we're kind of seeing on conforming loan limits there. So hopefully that will help you guys out, again, making these decisions. Now, I hope you guys have a great rest of the week, and I hope if we can help you guys out with anything, please shout. If you guys like these videos, we greatly appreciate you can help us out by smashing that like button. So we greatly appreciate it, and thank you so much for your time. I hope you guys have a great weekend. We'll look forward to see you on Monday. Take care. Bye-bye.